All right, guys, so welcome back. Another day, another week, getting started. We have a lot to talk today, so just bring this on here. So, Trump is back. There's a lot to be covering from him. We do have some idea of what he's going to be doing in 2025. And what he's not going to be doing. But I think that the best point today is just to discuss what we should be looking at. We don't care what he's going to be doing, but I just want to know where should we be looking, in a sense of, is it worth to be, looking at the US dollar, or is it even like a waste of time? Is it really going to be some huge moves happening there or no? So there's all of those kind of stuffs. Okay. So the first topic will be how Donald Trump returned to the presidency. He's creating some sort of waves in the FX market, and what does that mean to some pairs of the market? The second topic is, the Bank of Japan's potential interest rate hike and how is it shaping the currency movement, the Japanese yen. Second point. So as I say, and then the last topic will be the Federal Reserve data-driven approach in light of persistent inflationary fears in the US. Okay, so. And then in the end, pretty much we're going to wrap up with some strategies to help you guys navigate this sort of environment that I think is quite challenging. No matter what type of trader you may be. I know some people have been following me here for quite a while. Some people may just got started. So there's definitely room for everyone here. If you guys have any questions during the presentation, please feel free to, to jot them on the chat, and I would definitely have a look on them once I have some time. So to start, and before we go any further, I would like to just put it up the risk disclaimer so you guys can have a look at it, read it through. I'm going to give a minute, and then we're good to go. Okay, cool. Let me take this out and let me bring this photo. Okay, so Trump is back, guys. Yes. He's back, and there's a few things that we will be looking into it. But I think, it's a historic, of course is a history, it's part of the history, but not just for politics, but as well for the market. Trump was inaugurated, as they like to say, on yesterday, I think, on US, on the 20th of January. Today is the 21st here in Australia, so I'm one day ahead. And in his first few second, he's already taken some bold steps, I would say, that I've marked it down here. So I was listening to his inauguration live, and some of the things his speech during his speech after inauguration set the tone as a very, very promising golden age. Okay, because he say that let's make America great again, more than 100 times, but the golden age starts now. So that's what he's saying for America. Okay. While criticizing the, what he called a radical and corrupt establishment. So statements like these can create some sort of uncertainty around the market. And we all know that uncertainty drives market volatility. It has a lot of market volatility. I saw a nice phrase today was cheers to what it was. Let me check it again. I took a screenshot. It was saying cheers to uncertainty and volatility. Without them, it wouldn't exist adrenaline. So, cheers to those types of comments from Trump, because yes, it made some moves on the market. Okay, so the US once Trump takes immediate after he's taking the office, Trump signed several executive orders. There's like executive orders, and one of them is that the US is now pulling out of the Paris Climate Agreement and the World Health Organization. So he also imposed a 25% tariffs on imports from Canada and Mexico starting from February 1st. There's 2 points. All right, let's stop here. I think there is a good opportunity for us to be trading USD Mexico pesos. If you look at here, I've posted a trade idea today looking into swing trade long USD Mexico peso. And the reason is pretty simple, right? The US announcement of potential tariffs on Mexican imports has increased market concerns about Mexico's trade-dependent economy. This development could weigh on the Mexico peso as investors pricing potential economic headwinds, while the US dollar benefits from its safe haven status and, of course, geopolitical uncertainties happening all over the place. Now, and more into a fundamental approach, of course, we have the Mexico pesos kind of weak at the moment, and I think it will be not only the Mexico pesos but the Canada dollar as well. If we look at the Canadian dollar, had a big move on USD CAD today. Yeah. So most likely we will be looking US dollar CAD up as well. Okay. Because that was actually perfect buy opportunity, those pullbacks. And I will be looking to long US dollar CAD when it pullbacks. Okay. Another good opportunity with that is oil. But why is the 25% tariff imposed by the USA bad for Mexico pesos? Well, not Mexico pesos, Mexico and Canada, right? That's one of the questions, but it's pretty simple. So the 25% tariff imposed by the United States on imports is, someone sent something? No. Okay. So let's think about it, right? It's a very simple example. We have USA map here. Grab these images. Let's say any map, just this one. I need something a little bit bigger. Oh, there you go. Good. Okay. So we have Canada over the top. We have the United States, and then we have Mexico. Okay. And then some small islands, and then Puerto Rico, and etc. So let's say we are building a truck. All right. For that truck, we are industry. We are building a truck, and we are building the actual engine of the truck. Okay. So before the tariff got implemented, so last year, we were having pretty much no problems on importing and exporting things from Canada and Mexico. Okay. So basically, it would be much faster for us to get these goods, and we could give it out to clients quicker. So our deadline would be much thinner than maybe have to buy from components from other places. Okay. Now, we would be paying $1,000 for a clutch. All right. We would be paying $500 for a rotor and those kind of prices. Okay. Now, with the 25% tariffs, what will probably happen is if we have to buy something from Mexico, it's a 25% tariff. If we want to buy from Canada, it's a 25% tariff. Okay. So we either go somewhere else and have to wait a longer period, or we pay extra 25%. But the problem here is 25%, it's fine. We can pay for that. We have cash flow. Okay. We're a big business. The problem is who will pay for this 25% if it's not us? Who it will be? The population of USA. So basically, when the person's going to buy a car, the car will be 25% more expensive than it was before. So if the car was costing you $40,000, right, let me grab a calculator here. So if the car was costing, say, $30,000 before tariffs, now we have to implement 25%. So we're going to be paying $37,500. Okay. It's not actually this, but just so you guys have an example. Yes, it's good for the currency, but it's not good for the population. Okay. In some sense. All right. So before the tariff, imagine, again, the car manufacturer in Mexico costs $20,000. The car is exported to the US and sold at the price because there are no significant tariffs or trade barriers, right? So 20,000 is how much we pay, 20,000. After the tariff, with a 25% tariff, the US government adds an additional tax of 25% to the car's cost. So this means that the car price in the US raises by $5,000, but it pretty much 25% of 20,000. So the final costs for an American citizenship or whatever, an American to buy is now 25,000 instead of 20,000. Okay. So there's, of course, a lot of impact on buyers, as I say, American consumers looking to buy car or whatever thing it would be, might think it's too expensive now and may adopt to not buy. They may decide to buy a car made in US, which doesn't have to travel, which doesn't need to have the tariffs, and is cheaper, or switch to a car imported from a country not subject to the tariff. But that's a good thing as well, switch. Okay. So people are only focused on one example. Like, let me give you another example. So we've seen one side of the currency, right? Let me show you something. See if I have an example. Okay, I have this one. I can do it. Wait a minute. Okay. What do you guys see? You guys seen? I'm seeing it. For me, this is a piece of blank paper. That's all. That's all for me. Piece of blank paper. Am I wrong? For me, this is a piece of blank paper. That's all it is. What do you guys think it is? Okay. No, that's what I was seeing. A piece of blank paper. And I'm seeing what you guys are seeing. Hi. So basically, we only seeing one side. Okay. We have to see the other side of the currency, of the tariff as well. this can boost the consumption on US and not only prolonged the unnecessary cost hold from the consumer. So basically what can possibly happen is, okay, I don't want to buy a car made from Canada and export it to Mexico and then come back to US. I can buy a car from UK and then I won't be paying tax. I won't be paying the 25% tariffs on that. Okay, so basically I can decide to buy a car made in the US and I will pay 25% tariff. Made in Canada and pay 25% tariff, or I can buy a car made on US and I don't have to pay anything because it was made on USA. So in this sense, it's stimulating the economy. Okay, so think about it. We're trying to make the economy stronger, trying to get the population to spend inside of the economy and not outside. Okay, cool. That's pretty much the idea I think I was thinking to give you guys. Did you guys understood about this? I think it's pretty simple, right? Anyways, so let's think about what it means for us, for Forex traders, right? When someone imposes a tariff, when a president imposes a tariff, it impacts trade flows, right? First thing is trade flows. Canada and Mexico are two of the US largest trading partners. Okay, we can actually see USA trading partners balance sheet. Let's try to see very quick here. So that's the 10 years. 10 years since 2014 all the way to 2023. Okay. In 2023, Canada exported to US 440 billion US dollars. In 2022, 459 billion. 2021, 378 billion. So it's from 2014, 364 billion, now to 440 billion, pretty much 100 billion more in 10 years. Okay, somewhere around 10 years, 15 years. Okay, so that is the biggest exports were mineral fuels, oils, and distillation products. The equals, other than railway and tramway, machinery, nuclear reactors, boilers, and commodities, plastic, pews, electrical, wood and article wood, aluminium, iron, steel, aircraft, spacecraft. So these two things will be very expensive now for US citizens to buy from, different they would be preferring to buy from made on US, not made outside. So Canada and Mexico are two of the, as I say, two of the biggest US largest trading partners. So these sort of tariffs, make it more expensive for goods to flow between these countries. And we can take as a result the Canadian dollar and as well the Mexico peso have weakened drastically, as I just shown to you guys. And traders see these currencies as more riskier because the economies rely heavily to trade on US. If US now is saying, look, to trade with us, you're going to be looking to pay 25% to us, they will look to trade with other people, but they want to have the revenue as 400 billion in 1 year. Okay. On the flip side, we can't forget that the Russian ruble has a strength a lot, right? And many investors are betting that Trump will ease sanctions on Russia, and this would boost the economy, right? I don't think. Let me just grab the trading view here for a second. I don't think we have that quote on there. So if you look at here, since this beginning of the year, the Russia Rubble has accumulated a profit of 10%, right? This is USD Rub, so basically we're looking only on the Rubble. Let me see if I have the Rubble index. No, it doesn't. But anyways, there is maybe speculation saying that Trump will, seize the sanctions on Russia, and then this will potentially strengthen the Rubble, the Russian Rubble. But it's just a speculation. But I thought it was good to show you guys as well. So putting it all together, what does that mean to to alt trading on a daily today? So first thing is, there we go. The first thing is, let me give you an example. If you're trading USD CAD, let's say, you might see sharp movements as more news about the tariffs comes out. And it's very important to stay updated and look for opportunities when the market reacts to these sort of policy changes. So actually, let me ask you, how many of you trade US dollar CAD or USD Mexico pesos in the past? Do you guys have any positions open on USD CAD? Have you ever traded US dollar Mexico pesos? I do think that it's a good thesis on USD Mexico pesos. I think Mexico pesos is not that well, and there is a possibility of a good up move on that one. Zoom out for a bit. It's like US dollar Turkish lira. It's an emerging market. Have been going down for years and years now. So it's definitely opportunities on this Mexico peso. I think Mexico pesos will be like the second Turkish lira or Zimbabwe dollar. Let me see the answers. Bojo said USD CAD, no positions at the moment, waiting to swing trade on the long side. No USD CAD. Yeah, I believe on your long USD CAD as well. I think it's a doable. Anyways, so that's good. Now let's shift to the other side of the word and talk a little bit about the Bank of Japan. Okay, we've seen some big moves happening here with USD JPY. I'm actually short on USD JPY until this area of 152 400, and there's some reasons, but for years the Bank of Japan has kept interest rates incredibly low, and so low that that was actually called negative. Okay, they were actually negative. So this was done to stimulate the economy and to encourage the spending. But now the things are changing, and it's changing very quick. Japan's inflation rate has been rising, with wholesale inflation steady at 3.8%. Last month, we've seen the last release for Japan, which has we struggle with low inflation for decades. This is very significant, and it's led to some sort of speculation that the Bank of Japan might raise interest rates by 25 basis points, so basically 0.25% in the next meeting. So some of the big banks, I was reading some reports, and they were saying Goldman Sachs, Citi, UBS, JP Morgan, everyone is expecting 25 basis points. But it's so priced in, this move has priced in so much, the 25 basis points hike, that maybe there is no real sense to be trading this news. The hike, what it would make much more sense into a risk appetite from what we have to now is if the Bank of Japan continue to be quite hawkish toward the monetary policy, that would be much more interesting to us. Okay. Then we could be looking to add some short positions on USD JPY. We could be looking to minimize some risks and try to averse some risks into this. And that would be better. Thanks, everyone. But anyways, so Japan's inflation, as I say, is growing a little bit. So why does rate hike matter so much? Right? High interest rates make country currency more attractive to investors, as I've been totally saying to everyone. So if the board raises rates, the yen will likely strengthen. But as I say, it's very priced in already. Okay. So take this as an example. So has already dropped to a 1 month low. USD JPY has dropped to a 1 month low of 155.2. A rate hike could push it even lower, making the yen stronger against the US dollar and some other currencies as well that I'm looking at, like GBP. And this could create some trading opportunities when USD JPY, also in pairs like Euro JPY as well as GBP JPY, as I've mentioned. Okay. If you follow my trades, I've just posted a trade as well to short USD JPY. There you go. Short USD JPY and short GBP JPY. Okay, so this is not in profit. And this one is in profit. Okay. So that's quite good. But there's a lot to happen still. Okay. So, but there's a flip side, as always have, right? A stronger yen could hurt Japan's exports. And companies like Toyota, Sony, who else? I think BYD is Chinese in. But anyways, that I know is Toyota and Sony. They rely on pretty much selling goods overseas, right? And a stronger yen makes those goods more expensive for foreign buyers. So let's say you want to buy a Toyota Camry. I don't know how much a Toyota Camry costs, but let's say $10,000. Now, when Japan's hiked the interest rates, that car will be costing maybe $12,000. It's a $2,000 addition, but for some people it's out of the budget, and then they may lose some sales. So yes, it's good in a side for the currency, but maybe it's not that positive for stocks, I would say, from Japan. So I don't know how to navigate to your articles on the website. I've tried to a few times. What do you mean? Which website? The FinLogix one or the ACY? You mean the articles? Sorry, can you elaborate a little bit more? Just a little bit lost on that one. Thanks. Anyways, so for traders, like us, this means that we need to watch both sides from Japan. We need to be watching how much they're going to hike, and if they're going to be hiking more in the future. What is the forward guidance? Is he only trying to forward guidance us, telling that yes, there's maybe an opportunity for us to hike? Yes, from how the things going now, and from how the things are going now, most likely we will be, making some things. Anyways, we have to be watching what the Bank of Japan will be saying. Now, last topic is the US inflation and the Federal Reserve. Let me just put it to, what is it here? What is it? It's not this one that I want. Fed Watch 2. Perfect. That's the one. Okay. All right. So yeah, we have on the 29th January next week, we have 99.5% of chance of a no hike. That's pretty expected, I would say. So let's talk about inflation on US. Inflation has been a very hot topic for the past few years, I would say. A few weeks, few days, few hours, few minutes, seconds, years. It's always about the inflation, the high inflation, the sticky inflation. Why is it not rising as fast as before it was? It's still pretty high than what the Federal Reserve would like to be. Of course, the Federal Reserve always wants the inflation to be lower, within the target range, of course. But recent data shows that the retail sales went up by 0.4% in December, and which means that people are still somewhat of spending, but at the same time, more people are applying for unemployment benefits. And that shows to me, that suggests to me that the job market may be slowing, and that the increase that we had on the last release of the NFP from December may not have the same results this January into the release of November in February. Okay. So the Fed has been raising interest rates to try to fight inflation, as we already know, since 2023. But now they're being more cautious, all right? And they've said that they will look at the latest data before making any decisions. This is pretty much called the data-dependent approach. And we've seen some talks about FOMC, and from the last meeting in December, they've done 100 basis points cut. They've done 150 and 225. So most likely, what are they trying to do is maintain a proactive instance, of course, doing constant analysis, but this will, if the Fed continues to cut on the same mode as they were last year, I think the US dollar would be very, very bad. And then all my thesis of long in US dollar wouldn't be viable, because for now we have only one 25 basis points cut priced in. And that is on May. Oh, it's not even on May anymore. June now. Okay. So we have 125 basis points cut pricing for June, and then nothing else. And so there's only 125 basis points cut priced in. Some of the members that was giving some speeches later last week, they were saying that some members are believing on a 75 basis points cut in the entire year. Okay, not only in one go, but as in a whole picture, I don't think it would be quite how they would go, how they would follow. But if needed, then of course, if possible, if they can, if the labor market continues to weaken, if the unemployment rate continues to fall, if the employment continues to go up, and the average hourly earnings continues to be stable, most likely yes. Okay. For example, like the US dollar index recently dropped quite a fair substantial. Let me put it here. So if you look at some 1 hour chart, and that's in trading view, you know how rare is to have those gaps. Yeah, so it happened, right? It happens sometimes. But anyways, it dropped from 108.97, no, 109, 421, all the way down to pretty much 107, 900. And it affected the pairs like the euro dollar. Is we've seen this huge uptrend, this huge move up on euro dollar. Besides, because of that, and I did had a position long on euro dollar right here. Where it is. I have this short, but I had another long. Maybe I didn't post it here then. Yeah, it's not here. Anyways, I did had a long position on euro dollar, just trying to go this target here, looking for this consolidation at the moment. Okay, so most likely we're gonna go there or come back to this area first. But anyways, we have to be paying attention for key inflation reports like the CPI, the core CPI. These are the numbers, these are the data that will give us some sort of lightning in the end of the tunnel. So let me see some questions here before we move on. Suze is asking for CAD CHF. Look, Canadian dollar is really, really weak. Okay. Especially against the US dollar, as we see. No doubts that the Canadian dollar will continue to fall, right? We've seen this huge move down and another huge move down. Will probably continue to go down. Swiss franc is one of the strongest currencies after US dollar in a terms of if something happens geopolitical, this is the safe haven. Okay, US dollar and CHF are the safe havens. So think about it. If we continue to have these sort of moves from Trump imposing tariffs on Canada and Canada continue to have bad data, then yes, Canadian dollar will be very weak and the chart will continue to fall. Okay. Now, some finally, let's talk about some strategies, not strategies, but just some how can we improve some tips, I would say. So the first thing is you have to manage your risk very well. Okay, always set up a stop loss. I think this is the safest, the safety net in case the market moves against you and you're sleeping or somewhere, because we will have a lot of, until the market don't know what Trump's doing, any talk that he do, we have a massive move. Okay, don't risk too much. Be humble. Stay informed. Big one here. Stay informed. Trump's back on Twitter. Elon Musk did unblocked him. So use economic calendar, use Twitter, use Google, use ChatGPT, everything to your favor. Diversify your trades. Yeah, diversify your trades. Don't just trade one currency pair. Try to explore a basket of pairs like Aussie CAD, New Zealand JPY, Euro dollar, US dollar CAD, US dollar CHF, CAD CHF. Try to expand the currency basket. And fourth, I would say combine technical and fundamentals analysis as always I do. Bojo asks, how big a stop loss do you usually use when swing trading in terms of pips? It's not about how many pips, okay? If I tell you I use 100 pips, you can't be using 100 pips to euro dollar, and you can't be using 100 pips for GBP NZD, for instance, right? Let me grab the MetaTrader here and show you what I mean by that. Just open it. There we go. So bring this to here. Cool. So let's just zoom in here for a sec. And let's say I tell you, okay, it's 100 pip stop. 100 pip stop is 0.9798. Somewhere around 0.97% on euro dollar. Okay. Now, if we take a cross, we take, let's say, GBP CHF. Okay. 1,000 points or 100 pips would be 0.90%, so 0.7% of discrepancy, all right? And then when we go to even cross it, like GBP NZD, okay, let's say, sorry, then we're talking about huge points for small amounts of move. So this is it, 1K points, half a percentage, 0.90, 0.46. So what I mean by this is you have to adapt to the volatility. You can't just randomly pick a number and that's what it's going to be. No. For this, I go into insert indicators, custom, and then I go into ATR, and then I select 14, press OK, and then I have 220 is the average range that this market is moving in the past 14 candles. So in the past 14 hours. Okay. And that's my minimum stop loss point. If I want to increase, then let's say I want to trade in 15 minutes, it will be smaller, of course, because the 14 last bars. Okay. So let's say I will be trading for 6 days. Then you do this much times 6, and then you're going to have a number, right? There's plenty of different ways you can use, but that's one of the ways I use. And I've explained this before as well. Anyway, so let's wrap up. Where's my, again, here you go. Okay. Cool, let's come back to this page. So to wrap up, let's review what we've covered. First thing is Donald Trump returned to presidency. He's creating a lot of opportunities, but as well some risks with that. So, my suggestion would be use stop loss, be well maintained, know where you're trading, diversify your portfolio, and be on top of the news. Okay. Second point is that the Bank of Japan might raise interest rates, which will be strengthening the Japanese yen. So on Friday at 2 p.m., we're going to have the Bank of Japan meeting. It's never on time, but it's on the same day, so it should be Friday. We're going to be having this. I would be looking to trade USD JPY short, so I think there's nice opportunities in there. And last but not least, the Federal Reserve is watching inflation very close. It's watching the market, the labor market as well. But, the decision is more data dependent, I would say, and they have time to assess the income data. Okay, so they won't be looking to take some crazy market positions. Plus, we only have 25 basis points cut priced in from CME, and some members from FMC expecting 75. Somewhat reasonable trade cuts of 25%, but I see much more chances of only 1 to 2 this year. All right. Now, guys, thank you so much. I think we've covered everything. And I see you guys tomorrow at the same time, 5 p.m. to 6 p.m. And we go from there. Thanks, everyone. Have a good one. See you. Bye.